Hello and welcome everyone to Silver Asset of the Day for the 2nd of July 2021, presented by myself, Phil Carr, at the Gold and Silver Club. So as we get towards the end of the week here, what do you need to be aware of? Well, we have now moved into a new quarter. We're halfway through 2021, and you will have no doubt observed exactly what we talked about on the week ahead commodity report and Gold Asset of the Day. Expect downward pressure at the start of the week over Monday, Tuesday, and Wednesday as you get closer towards the end of the quarter, with traders and investors rebalancing their portfolios, booking their profits for the quarter, exiting out of trades. That will create strength in the dollar that will put pressure on the metals, but use that as a buy opportunity to build positions on the metals. And then of course, as we've gone into Thursday, the 1st of July, we immediately saw that bounce higher, over 1% gain for silver prices, 1.8% gain for platinum prices, 3.8% move to the upside for palladium, and just under a 1% move to the upside for gold. Now this comes back to, of course, what we mentioned at the start of the week, that it's so important to be aware of capital flows and that end of quarter cycle in the market. What we've observed out there is so many traders, again, they've panic sold towards the lows of the week, expecting the price with the metals to break down much lower, completely oblivious to the fact that we're moving into a new quarter, that the same things happen time and time again. It's the same situation at the end of March where we saw big corrective downside on the metals and then immediate buying come in on the very first day of April into the second quarter. And we've talked you through this step by step on the week ahead report and Gold Asset of the Day, that what you wanted to look at was opportunities on gold at the 1750 level this week to buy in. And that actually ended up being the low of this week. We retested it just again on Wednesday. We were actually ourselves and our clients at the Gold and Silver Club able to sniper in and get some really nice low entries this week on the metals, not only on gold, but also on platinum as well. We're now up over 6,000 points on our two trades on palladium, which has worked out perfectly. We identified that trade opportunity with you in detail just a week and a half ago. So of course, for every one lot contract that you would trade on palladium to be up 6,000 points, that's going to be $60,000 of profit. For every 10 lot contract that you'd be trading on palladium, that's $600,000 of profit that you would benefit from alongside ourselves and our clients at the Gold and Silver Club. And that was just in a matter of 10 days. So where we're at right now, as we get towards the end of the week, we saw that pressure at the start of the week that we talked you through in a lot of detail, and now this subsequent bounce back into the very first trading day of a new quarter. We're now halfway through 2021, and you just watch it out there. There's going to be so many traders that miss this move to the upside because they've either panic sold at the lows and liquidated, or they're getting too bearish on the metals, just as we're seeing an inflection point as we go into a new quarter here. We've already taken the opportunity this week and last week to build into these sell-offs on the metals to accelerate our gains here as we go into a new quarter, as we move into July. And the massive issue that we see out there is just so many traders are taught outdated technical analysis strategies which just do not work. They may have worked 5 or 10 years ago, but you're in a different market environment now where you need a lot more data and market intelligence to have an edge. All of the market makers out there, they know exactly what the average retail trader is taught in terms of technical analysis for their confirmations, and they will often fade the market. This is why you keep seeing technical traders, they keep buying right at the high and getting chopped up, or they panic sell out at the low just as the market is about to reverse in the opposite direction. A lot of the time the stop losses are too tight in the market and they just end up losing a lot of money, getting chopped up a lot in the market, and unfortunately they just don't know any better. But anyone who's been around a long time in the markets knows very well that technical analysis alone does not work, and it's one of the most lazy approaches that you could take. It's the first thing people are taught when they just start to get into trading, and you need to evolve your trading process to a professional process beyond that to really give you that edge in the market. Banks, hedge funds, money managers, institutions, they know this. They know that technical analysis is one of the most basic ways that you could be trading the financial markets. And you need to know that because there's nothing special about just being able to read charts. There's a lot more that needs to go into it in order to give you an edge. So with that, let's bring it back to silver and just go over a few points points here. So first of all, we do have a major news item coming up later on in the week, and that's Friday's non-farm payroll data. That will be at 1:30 London time. That can create some big volatility in the market. So look out for that as a potential catalyst for big moves. What we're seeing a lot out there as well is a lot of talk about the dollar. Because it's so strong right now, that will put pressure on the metals. But there are actually times of the year when gold, silver and the dollar can rally in tandem together. If you've been trading the commodity markets for any period of time, you'll be aware of this, that at certain times of the year, gold and the dollar, they lose that inverse correlation and they can rally in tandem together. On Thursday and Wednesday, gold, silver and the dollar all rallied both of those days. So you can't look at that inverse correlation as a reason to be going for a sell short on the metals right now. Again, this just comes down to experience in the market and not being taught incorrect information. Now, alongside that, as we go into next week, I would just be aware that on Monday, it's a US public holiday, and with that, you can tend to see more exaggerated moves in the markets. But the most imminent major news item to be aware of is Friday's non-farm payroll data at 1:30 London time. Then alongside that, in terms of the ranges this week, well, gold, we talked you through it. On gold asset of the day that we were looking at 1750 up towards the 1800. So you wanted to be a buyer down towards the lower end of the range, 1750s, which worked out extremely well for this week. Gold right now is trading well above those levels. Now with silver, I still like silver below $26 per ounce, down towards 25. So we continue to buy on dips down towards those levels. The lowest point that we got to over the last week has been $25.50 per ounce. But again, each time silver dips down to those levels, it spends very little time there before getting a bid. But I do still like that zone as an accumulation zone to buy on dips between 25 to 26 US dollars per ounce. Essentially, nothing has changed in terms of the overall fundamentals for the silver market. And as you know, inflation continues to run hot. Interest rates are at the lowest they've been in years, which means your capital just sitting in the bank is depreciating in its purchasing power. And you don't want to be lazy here, trading outdated technical strategies or gimmicky indicators. It's all about your time here. So we want to save you time so you're not wasting the next 3, 6 months, 12 months using the same outdated strategies in the market, because you're not going to get anywhere. You're not going to be able to push yourself forward and evolve to the next level of your trading. So with that, if you would like to learn the research-driven approach to the market, where you'll learn a professional process utilizing the intermarket correlations in the market, have access to in-house data on market intelligence, alongside that, be aware of the daily, the weekly, the monthly, and even the quarterly cycles in the market. Marry that up to with the ratios, with the sentiment in the market. Further compound that with your understanding of the biggest catalysts for commodities that will give you the biggest moves. And alongside that, understand the fundamentals, the macroeconomics that really drive the commodity markets, and of course what the hedge funds, money managers and banks and institutions are doing. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.